right, good morning, everybody. Looks like we'll go ahead and get started now. Real quick, this class is being recorded, so we will have the link available afterwards. So, if anyone on here, our crowds have gotten smaller because we record these now, so we provide the links to folks who can't make it at the actual time we're on here. But if you're on here and you think your board will benefit from this, or you have other managers that you believe will benefit from this, feel free to send them the link. So we will have this link available, and it'll be in our archive of videos afterwards as well. So I just want to mention that. This class, which is actually unique, we've done this several times before, but it's been a while, is a CEU credit course. So any property manager that's on this call that is signed up with their CAM license number will be getting 1 hour of CEU credit for being in here. Of course, you have to be here from when we start nowish to when we finish. So you've got to stay on for the duration, but we will have that credit, probably will post in the next week or so. So this is a credit course. Again, when you watch the link later, it's not for credit, but if you're on live now, you are able to get that. So make that mention as well. Most of you on here know who I am, so I won't go into super crazy background, but I know that we are recording this and folks are going to see it that don't know me or don't know Assured Partners. So real quick, Phil Massey with Assured Partners, my partner Nagar Sharifi as well, who's not on this call, but you've seen her do these with me before. The two of us specialize in Florida Community Association insurance programs. So we insure about 1.5 thousand plus condos in the state of Florida. I know that sounds crazy. It sounds crazy to me to even say that after all these years, but we do as many or more than any other agency, especially here in the Central Florida area. Office is located in Central Florida, but we deal with the whole state. So we have stuff in the Panhandle down to Miami into the Keys, and then up and down both East and West Coast. So plenty of coverage around the state. Our team is about 25 individuals here in the Orlando office that we're in. So myself and Nagar being the two producers, and then the support staff with us that do a great job that specialize in this as well, like we do, kind of breathe it day in and day out. Both myself and Nagar both have our CIRMS designation, which stands for Community Insurance Risk Management Specialist. That's the highest designation an agent can get to specialize in the community association insurance world. So from an insurance agent perspective, kind of like the PCAM would be for the property manager, and it's given out by CAI. So last I checked, this number might be slightly different now, but there was about 8 other CIRMs or 8 total CIRMs in the state of Florida. Again, Nagar and I being 2 of those 8. And then I think there's about 110 or so of us around the country. So it's, again, not something that's easy to get. We usually try to promote that to let boards know when you're looking to interview agents for a position, really having that as a requirement is important in my mind, because it separates the people who just kind of dabble in this versus the ones that are doing it day in and day out. Oh, great. I see Nagar joined. Sorry, I didn't see you on in the beginning. So, all right, there she is. Perfect. Okay, good. All right, I have my other screen open, so sorry, I didn't see you there. So just chime in or yell at me any moment if you want to. The only other thing I'd mention, Assured Partners, if you don't know about Assured Partners, we're the 10th or so largest agency in the country. So large agency. We run the Orlando office. We are corporately headquartered in Orlando, but our office is separate from corporate. And there's a lot of Assured Partners offices around the country and in multiple states and things like that too. So for those of you not familiar with Assured Partners, it's a big agency. Nagar and I are here in the Orlando operation and kind of run around the state here. So going out the intros here and into the actual class, kind of developed, we have 8 different CEU courses that we've created over the years, and the disaster preparedness one is one we've been teaching for several years. And I try to, when we created this class, we tried to do it in a way that made it a little more unique or relevant to what the managers are going to be seeing or doing. I've sat through a lot of these courses that are pretty boring and don't really talk about anything that special. And so we're trying to make this useful for what we've been through. So most folks on this call have been through Irma and Ian. We used to teach this course before Irma came through, and there was kind of 11 years with nothing. So a lot of managers came on since Charlie, Wilma, Francis, Jean, Ike, Ivan, all those storms, Katrina back in those days, and had never seen a hurricane or dealt with a hurricane before. But now I feel like everyone on this call is kind of like grizzled veterans, sort of, right? So we've been through numerous hurricanes in the last few years that have been really crazy. I mean, the fact that Irma, caused losses for me on accounts we have in Miami and in the Keys, and also in Jacksonville in one storm. I mean, that really shouldn't happen, but it seems like Ian and Irma both decided to go up the entire spine of the state and touch literally everything. So those storms were fun. Really, really don't want a storm in 2024. I think everyone on this call would agree. But unfortunately, for anyone who's looked at it, the 2024 hurricane season outlook is like the exact opposite of last year. So last year we were on this and did this class, and the 2023 storm season projection was good. I mean, it was basically saying that there was a strong El Nino in place, which creates the trade winds, and that we weren't looking at a lot of storms, and we thought it was going to be below average. We actually did end up having a good amount of storms, but only one made landfall in the United States or significantly, and that was was Idalia, and it hit the kind of best part of Florida if you're going to hit something, because there's not as much stuff in that Big Bend area. So we got a little lucky there, even though that was a major hurricane. But 2024 is looking like it's the exact opposite. So terms like hyperactive, turbocharged, record breaking. I mean, not trying to scare people, but take this stuff with a grain of salt. I feel like the news can't get stuff right for what's going to happen an hour from now in terms of weather. But they are predicting this to be a very significant season that's well above average. So 20 plus storms, 10 plus hurricanes, 5 plus major hurricanes. That's basically everyone's above that on each one of those. So you look at all like Colorado State, AccuWeather, Weather Tiger, all the prognosticators that are out there, right, are showing that. I will tell you one of the big ones has 33 as their number. So you talk about being over 20 storms, right? 33 named storms, with that being 27 to 39, which would be record breaking if it actually hit that high. So there are some incredible numbers being thrown out there. So it's scary, obviously, because you don't want an active season. But I think what makes this season even worse is that we've kind of got three things happening at one time. We've got a strong La Nina that's forming. So if that forms the way they project it to form, that's the exact opposite of the El Nino. So La Nina takes away the winds that kind of rip these storms up in the Atlantic. So that's a negative. Also, we have record warm Atlantic Ocean temps right now. So unfortunately, that's probably the way the world is right now, but it's, like 2 degrees above where it typically is, or whatever they're saying, 1.9 degrees difference. So very strong or very hot ocean temps. And then we also have a strong Bermuda high that's expected to form this year, which when that happens and it's strong and it's over Bermuda, it kind of steers the storms towards the United States versus letting them curve up. So that's the projection, right? Is you got kind of not only a lot of storms going to occur, but you have these three things that are going to potentially make those storms more likely to make contact with the continental United States. So if you look at it, the historical landfall average is 43% chance of a storm hitting in any given year. They're saying it's going to be 62% for the United States this year, and that the major hurricane landfall is going up from 20% to 40%. So, if you pay attention to any of this stuff, I mean, if you take it for what it's worth, I mean, the projections are showing that it's going to be an active season. And so I would prepare for every season to be active, because we learned a long time ago when I was a young boy in South Florida and we got hit by Hurricane Andrew. I mean, that happened kind of middle August. I mean, I remember it was the first day of school, right? So school was supposed to start, and an A storm was happening for the first time, late in the season. And it didn't matter. We didn't get hit with much else that year, but all it took was one. So that's kind of the deal with any storm season. But obviously, when there's a lot of storms like this, it makes things extra interesting. The one change that's coming right now is there's a new hurricane cone this year. So you guys are used to seeing that hurricane cone that kind of tracks where the storms are going to come on. The cone is really set up for coastal counties, like where the storm makes landfall. Apparently, this new cone is going to help more with some inland risks associated with the storm. Because what you also learn living in Florida is that we don't have like a giant mountain range that breaks these storms up. In fact, when they come over the state, they sometimes don't really weaken all that much, because it's over, depending on where it hits in the state, over very warm, Everglades type swampy water, and not a lot of restriction for the wind. So we saw with Hurricane Wilma, that thing basically turbocharged over the part of the state it came over in South Florida, and really did some damage to West Palm. more so than it did where it came on because it hit a less populated area. So just things you learn in doing this over the years. So you got to pay attention to that stuff. Recent history, look back at the worst hurricane years on record in terms of insured losses. And it probably doesn't surprise anybody on this call, but 5 of the 10 worst years ever in recorded history were in the last 7 years. It's just, so we're on a little bit of a streak here, right? So 2017, you remember Irma, Maria, and Harvey. Terrible year. Don't want to repeat that year. 2018, it was Hurricane Michael. That was a panhandle storm, really bad, a Category 5 storm, Mexico Beach up there. 2020, we had the Laura, Delta, Zeta, Eta, basically every storm that ever existed hit the panhandle in Louisiana those years. That was not fun. It was a really bad year, even though South Florida didn't take those hits, and Central Florida, the panhandle was definitely involved again for the second year in a row there. And then in 2021, you had Elsa and Ida that hit. And then 2022, Ian and Nicole. And Ian was obviously a big deal, not only from a wind perspective or from a rain perspective, which we'll talk about in a little bit. Worst year ever for the record was 2005, was the Katrina, Wilma, Rita year, which was over $105 billion in insured losses. But hopefully we don't see that again. But just the fact that 5 of the 10 worst years ever were in the last 7 years is kind of crazy. 2023, again, a little bit of a reprieve with the way Idalia hit, and that really helped. And you guys saw that. So we recently did a budget update where we kind of talked about the market and how things are going. And we mentioned in that budget webinar update that the 2023 storm season was positive, which then led to the Florida property carriers actually making money or losing less money, however you want to look at that, here in 2023, which has obviously helped us from a rating perspective, and that those rates have come in better than projected. So the storm season means a lot into these things. It's not everything, but it means a lot. And so having a really good season this year to follow up on 23, I think will really help. Having a disaster season is obviously going to set us backwards. So we're trying to obviously, knock on wood, do whatever we have to do to get that positive season. So then, question we get is, what is hurricane coverage? So I know it sounds stupid, but we'll kind of start there. So wind insurance is what we're talking about here. So you'll see from your agent sometimes that you have a quote, a property insurance quote that includes both wind and non-wind property perils. That's pretty common. But every now and then you may have a scenario where these coverages are broken apart. So you have a wind-only carrier and a wind-only policy, and then a non-wind policy. The hurricane coverage falls under that wind coverage. So if you do not buy wind coverage, and we have seen folks not buy wind coverage for a variety of reasons, you will have no coverage in the event that a hurricane hits. Same thing with a hailstorm, tornado, tropical storm, straight line wind, derecho, anything like that hits that's wind or rain or hail related involved in a windstorm would not be covered. If you have wind coverage, then you have hurricane coverage. So just think about that. The non-hurricane coverages, which we're not really talking about today, but those are what we call ex-wind, excluding wind perils. And those would be like fire, lightning, pipe burst, things like that, the more common day-to-day type losses. But again, hurricane coverage falls under that wind coverage. Then we often get questions about flood insurance. So flood insurance is not included in hurricane coverage. So important for folks to recognize that. Flood insurance is purchased separately in almost every scenario. So there is very small percentages of property policies that will include flood supplements, but that's not common, especially not in Florida for the condo association world. So if you're going to have flood insurance, that has to be purchased separately. Each building will have its own separate flood insurance policy. So if you're on the coast, we get these questions sometimes where a hurricane makes landfall and brings storm surge with it. And so there's damage that folks, are like, hey, well, is this hurricane damage or is it storm surge damage? It's probably both. So you're going to take wind damage from the storm and you're taking storm surge damage. The flood coverage definition is pretty strict. So it's going to be that water that comes in there. If it goes 4 feet up, whatever, any damage that does, flood insurance. Wind is going to be from the hurricane side. I made that sound simpler than it is. I know it's complicated during the event of a loss, but it's why you want both coverages. So at least they're fighting who's covering it, not, nobody covering it. So flood insurance is important. For the first time in my career, and I've been doing this 18 years, right? So first time we saw widespread RCBAP, which is the condo NFIP FEMA flood program claims, was in Ian. So when Hurricane Ian hit, we had tremendous rainfall throughout the state, But in Central Florida, in parts of Orlando, I mean, we saw like, 20 plus inches of rain in a 24-hour period, which is broke all types of rain records. Talking about that storm from a rain perspective, what's like a 1 in 2,000 year type event here in Central Florida. And we have associations that were completely destroyed. I mean, we've got communities that took 4+ feet of water in every single first floor unit in the entire complex. So, I mean, every single building going down. And then we even had associations that were not in flood hazard zones that ended up dealing with flood loss and didn't have flood insurance in place. And that became a whole cluster as well. So we saw it run the gamut. We saw people with flood insurance have flood claims, people without flood insurance and non-flood hazard zones still deal with flood losses and Ian. So, hurricanes or wind is an issue, but flood can be a big problem as well. One of the biggest takeaways of this course is going to be the hurricane deductible. And I know you guys are pretty familiar with this now, but again, a few years ago when we created the course, people weren't used to hurricane deductibles and what kind of impact they have. But every single one of you on this call will likely have a separate deductible that applies for either all wind losses or named storm wind losses or hurricane wind losses. But for a hurricane, guarantee it, absolutely, you have what's called a percentage deductible. Now, what that percentage deductible can vary depending on the person listening here. So the lowest percentage deductibles you'll see in the state of Florida is a 1%. I haven't seen a 1% in several years, so no one on this call likely has that. 2% is kind of the one that maybe a small percentage of you still have. Most of you are going to be at the 3 or the 5% deductible, with the majority probably at 5%. Because as the market's hardened here over the last few years, we've seen the 1s and 2s go up to 3s and 5s for the most part. Some of you may still have 7.5% deductibles. They became popular in 2023 because of how nasty that market was. And then 10%, 15%, and 20%. So we have seen deductibles go that high. Highest I've ever personally sold was a 15, but we've seen them, go up to 20 in some scenarios. Obviously, the lower deductible, the better. But obviously, cost becomes an issue, and then insurability depending on the scenario at the association. So there could be reasons why you have higher deductibles. But the big point here is the percentage deductible is a lot more impactful than the flat dollar deductible. So if we just run a quick example for you, let's say a typical condo association, it's 10 buildings, so 10 separate buildings. They're all identical. They're all valued at $2 million each. That would be, if you do the math, a $20 million association. So you've got 2 million times 10 buildings, so $20 million. Let's assume in that scenario that you have an Irma-style storm comes through, or whatever hurricane you want, and it damages all building roofs. So every single building is damaged. What would your percentage deductible be? So in the event of a 1% deductible, that would only be a $200,000 deductible. I say only, but 200,000, 1% of 20 million. Because again, every building's damaged, 20,000 per building. 2% would be 400,000, 3% would be 600,000, 5% would be $1 million. So to give you an idea there, a 1% deductible is $800,000 lower than a 5% deductible. So the difference in deductible matters a lot from what the amount of that deductible is going to be. Now, one thing that a lot of folks get wrong sometimes when they're looking at deductibles is they think they have to pay the deductible. Like, oh, we have to pay this deductible. We need to come up with money to pay it. That is not how a deductible works, okay? So just make sure we understand that the deductible is just less money the carrier is going to pay you. So if I give you an example, again, we go back to that 10 building, $20 million association. Let's say they had a 2% deductible. That would mean they were responsible for 400,000 of the damage. So let's say the total damage at that association when the adjusters got out there, went through it all, was $1.5 million. The carrier would not charge you the $400,000 deductible. Instead, they would just remove the $400,000 from the total amount of damage. So instead of 1.5 million, the association would end up with 1.1 million. So you would get $1.1 million. Now, we've seen many associations in the past be able to do what they needed to do for that money. But obviously, there are other times where that money is not enough to put the new roofs on, to make the repairs, and you got to go and fund that difference. And so there's numerous ways that you're going to find that $400,000 shortfall to get the rest of the work done. So one of those is reserve funds. So obviously you have a roof reserve fund, and it's well funded, which a lot of you with the recent SIRS we'll get into it later, but with the Senate Bill 4D requiring structural integrity reserve studies, roofs are part of that. So if you're 3-story or taller, one way or another, you're going to have a roof fund that's properly being fully reserved. So it's whatever the amount is supposed to be for, let's say you're 10 years into the roofs, you should have that amount to replace them at the 20-year mark, for example. So you should be 50% funded. So you can pull money out of the roof reserve fund if it's roof damage. You can pull, reserve fund money for other parts of the building if they're damaged by the storm, because if you're replacing the roofs, you can obviously use reserve funds. So a lot of times boards don't have enough in reserve funds. If it's a newer roof, you're likely not going to have enough. But some of these buildings with older roofs that have been properly reserved, there's going to be funds there on the reserve side to get to. Cash on hand, obviously, we got operating funds and money sitting there. You can use that. Letter of credit, setting up some sort of letter of credit prior to storm season that the association can draw from. That's a good idea, figuring out, getting into storm season, how to prepare properly so you have funds available there. Loans, a lot of associations will take out a loan after a storm to make repairs with monies that they either didn't get from insurance or were less in insurance. And then the thing everybody's doing is most likely passing an assessment. And those assessments, what's important in the state of Florida is, up to $2,000 of that assessment that you pass can be paid by the homeowner's carrier, so the unit owner carrier that's in place. So if you've got, 50 units, that's 2,000 times 50. There's a pot of money there that can be gotten from the homeowners carriers versus your individual, owners that live there. Now, I won't go into all the detail of how you all do that, but at the time of loss, you're most likely going to be dealing with gaining money from all of these angles, right? So you might pull some from reserves, some from an assessment, some from, cash you have on hand or a loan you have to take out. So it's always going to be, all things are going to be involved in getting that done. But it's important prior to the storm season to make sure you have a plan, that you know what you're going to do, how you're going to get those funds if you need it. I've seen associations create deductible reserve funds in their reserves as well. So there's things you can do to kind of get some money together to be ready to go, because you're going to be responsible for a chunk of it. Also, there's stuff that's not covered. So we're going to talk about this a little bit later, but like landscaping. I mean, we're not covering landscaping on any insurance policy in the state of Florida. So, if the trees go down and you need to haul the trees away, the only way it's covered by the insurance policy is if the tree falls on something that's covered by the policy, like a building. But short of that, I mean, sometimes there are 6 figures in just landscaping removal and deal and stuff like that. So you got to be prepared there, because that's not going to be paid through insurance. That's coming out of the association fund. So stuff to think about. There's always something that's going to cost money that's not really covered either by the deductible or by the policy not covering it. So keep that in mind. Another issue we see is a replacement cost versus actual cash value. This is something that has become very popular, relevant, whatever, over the last few years. So if you look at the first probably 15 years, Nagar and I did this, all the roofs were basically valued at replacement cost. You very rarely ran into a scenario where the carrier was applying what's called depreciated value or actual cash value on the roof coverings. That is something that started a few years back, where they said, hey, any roof older than X amount of years. So it started at like 20 years, then it was 15 years, then 12 years, then 10 years. So it really depends on the carrier, but they will put in wording that says that the roof coverings. So like, for example, when you think of a roof, it's the shingle on top and the wood decking, right? So the covering of the roof is going to be at a depreciated value versus an actual replacement cost value. So that is something that we see that is becoming less of an issue, because some of the carriers, with the market getting better, have agreed to the replacement cost or have pushed it out further on the number of years. But as you get into your older roofs, sometimes it's unavoidable. I mean, you're sitting on a 20-plus-year-old roof, only a few carriers are going to give you that replacement cost. A lot of them are going to want to depreciate that roof covering. And you could run into some issues with lenders, for example, where the lenders don't quite understand what actual cash value on a roof covering means or why, and they just they want to make it a problem on the loans, even though I could argue it's not, because again, you've got a roof reserve fund on these older roofs, and as long as it's properly being reserved, the ACV issue is really not a big deal. But no one ever wants to do the work, right, on the lender side. So we run into that issue sometimes, but always easier if you can get replacement cost. The other piece here is the property sublimits. So this is something, again, that if you go back to the first, well, maybe go back to 2006, 7, 8, this was popular, and then it went away for like 10 years and then started to come back, where you've got associations that cannot get the full wind limits. So you just, for one reason or another, either because you have an open hurricane claim or you have some sort of damage at the property or you can't afford it or whatever the deal might be, you may not be able to buy full limits of wind coverage. So you've purchased or looked at buying some sort of sublimit of coverage, like 2.5 million, 5 million, 10 million, instead of buying the full value. So that is something where that has happened, and you might see that as well, but that's a wind sublimit. When you have a wind sublimit in place, you still have your deductible, and then the wind sublimit pays. The agent should be aware of this, modeling the risk, trying to make sure that when you buy that wind sublimit, you're still buying enough to protect you. It's unlikely you're ever going to have everything completely gone in a loss. So the sublimits can be useful, but they can also be problems with lenders and stuff like that too. But that is something that we see in this market, and it's just kind of the nature of the beast. Kind of moving on here into making a hurricane claim. So hurricane claims are going to be different than your average claim issue, right? So like if you have a pipe burst, you guys know what happens there. You've kind of been through that before, but some of you may not have dealt with hurricane claims. I get it. The last few years, most of you on here probably have in some way, but hurricanes are just not your average claim process. And the reason it is so different is that when a hurricane hits, it doesn't just fall out of the sky and hit you and nobody else, right? So it's not like a fire burning one of your buildings or a pipe burst or something where you have a loss and everyone's trying to take care of you. You're dealing with thousands of other people filing claims at the same time that you're filing a claim, and it just completely jacks up the hurricane claim process and makes it very difficult. We saw this in Hurricane Irma, where it came in and there were so many people filing claims, and then you had Maria and Harvey happening around the same time, and adjusters going all over the place, and the carriers did not have enough adjusters to deal with the claims that they were getting in, which is a problem that you would hope the carriers have adjusted to since. We all know that's probably not the case. At the end of the day, there's going to be a shortage of adjusters and there's going to be a wait time. So when you have a loss, you really need to be able to survive on your own at first, right? You're not going to have an adjuster that shows up within 24 hours. You're not going to have people, repairing and replacing the roof in the first 2 weeks. It's just not the nature of a hurricane claim because there's so much stress on demand with supplies, with costs, everything. It's going to be difficult. So kind of our notes here for what you need to do, you want to document your damage. So, clearly document any hurricane related expenses that you have. Make it very clear, create an Excel spreadsheet, put in, all right, this cost me money, this cost me money, anything that's claimed that's the hurricane related, put it on there. At this point, we're not saying to exclude things are not covered. Include everything. I mean, I think when you file a hurricane claim, you don't want to say, "Hey, I'm expecting, to not have this covered." I think at this point, if we're filing the claim, we put it all in and we see what happens, right? So you put it all in. Don't worry about it. I spent $100,000 on landscaping. We know landscaping is not covered, but anything that's hurricane related, I'd say you document, you put in that spreadsheet, let the adjusters deal with that. You want to mitigate damage. You're required by your policy to mitigate damage. So tarping roofs, boarding up windows, whatever you can do in an emergency service post-storm to get the buildings protected. Hurricane season does not happen in the winter, unfortunately. It happens in the dead of summer, right? So August, September, and then October being the busiest months for the storm season. And it's like 137 degrees here in Florida. And of course, when the hurricane hits in August, the next day it's pouring rain from storms. It's 100 degrees. It's all those things. So you want to make sure you're getting the buildings protected, or more and more damage is going to continue to come in. So you got to have a plan for that. Because again, the carriers are not in there tarping roofs for you, right? The association's dealing with that on their own. When you submit a claim, submitting the claim officially to either your insurance agent or directly to the carrier is important. So you want to make sure that gets done right and gets submitted correctly. When a storm's coming, you'll see if you're with us and you're insured with our team, we provide all these storm prep emails where we'll send out the emails with details of who to call in the event of a loss. We're going to have our system set up to help you, but just in the event that that's a problem, you'll have the direct line into the carriers and how to file those claims. So we kind of go above and beyond to make sure that you guys are ready prior to storm season, prior to a storm hitting. So you'll see if like a storm's going to hit Central Florida on September 10th, and we know it's going to hit in Orlando, or we know it's going to hit in Miami, we'll target the clients we know we have in that area and make sure they get an email that provides some updates for the managers, as well as what to do and how to handle this and everything. So part of that will be how to submit that claim. And then,
Phil,
yes, go ahead.
it's important to note that they at least communicate with us when filing a claim. We need to know, because that's oftentimes when you all file a claim directly with the carrier, sometimes they will never tell us. So please be sure to notify us if a claim has been filed. If you directly called, at least let us know that you filed a claim. Or if you end up retaining a public adjuster, a lot of times those public adjusters will just file directly without communicating with us. So if you can, just make sure that if a claim is being filed, to let myself or Phil know, whoever your agent is.
Yeah, very important. Good point. So, I mean, definitely CCing us on it, or if Christy Lawrence, who's our claims coordinator on our team, who's on this call as well, just making sure that someone on our team knows so that we can file that stuff as well for you. So, and then, building a damaged property back. So, just we try to be careful here. Like you heard about this term assignment of benefits. I mean, a lot of this stuff, the law has changed this so that it's not as much of a problem as it was the last few years. But I still think you need to be very careful. There is going to be a ton of contractors that come out of the woodwork, right? Folks that you've never heard of, people from different states, and they're going to try to get you to sign everything and anything. And they'll promise they're going to put your building back and they're going to get you back to the way you were and everything. And they're taking advantage of you in a bad scenario. So really, really, really want to go ahead of storm season, get ready with contractors that you trust already. Because if you're just calling the person who basically shows up in a truck and is like, I can handle your stuff, you don't know what you're signing. You really want your attorney involved in reviewing that contract. You don't want to just say that you're in a bad spot, so you sign something away. We had many associations that did this, not many, but most of our clients, we got ahead of it. But you did see some that weren't our clients, or even maybe a few that were, where just really horror stories of dealing with fighting public adjusters for years on end. In fact, I've got an account right now in Central Florida that is still in litigation over the Irma claim that they had. So this is going back now, 7 years, and the community is in complete, problem, and they can't get the stuff done because they were fighting with the public adjuster who they assigned rights on the claim, and it took several years of fighting with them just to get back in the position that they needed to be in. So just be really careful of that stuff as you're going through it. You don't want to sign something that you're going to regret later. And then
just have the attorney review it.
Yeah, that's a good call.
Really,
I mean, they should be working
please.
with you.
Yeah, please make sure you have your attorney. As Phil said, there are numerous cases where an association wants to close out a claim. They want to close it, but once they get a contractor involved that has them sign some sort of agreement, and now I know there are restrictions for assignment of benefits, but before we know it, they're going to call it something different. It's going to skirt around the law. So before you sign anything, please have an attorney review, or send it to me and Phil, and then we'll try to help how we can. But we may just say the attorney needs to review this before you sign.
Yeah, we could probably see some of the big things for you and try to help. It's just, again, there's going to be hundreds of people with those issues. And so trying to work through it, you want to make sure you're ahead of that. And the time frame too on filing claims has changed. So back several years ago, it used to be that you had 3 years from the time the hurricane hit to file a claim. Then it got moved to 2 years. And now with the most recent legislation, as of 2022, it's now down to 1 year. So you have 1 year from the time of loss to file the hurricane claim. So that, again, 1 year should be enough time on a hurricane loss, because you should know in a hurricane if you have enough damage. The 3 years I thought was too long, because you started getting people filing it the day before the 3 years was up, and they were claiming stuff, and it was very difficult. All those claims ended up in litigation because it was like, well, we got hit with how many hurricanes since then, or what other storms have happened. So I think it's cleaner with the shorter time period, but 1 year is pretty tight. It happens before you know it. So just make sure you're paying attention to that too, because after the year goes by, you're not going to be able to file it any further. And sometimes, a storm comes through and then 6 months later, it doesn't rain, for a while here. We get into non-rainy season, then the rain comes back and then you start realizing there's damage you didn't know before. So just make sure you're monitoring that. Another point that comes up a lot is trees that fall on cars. And I just want to note this because this is man, it got to be one of the most common questions we get. So in the event of a storm, a lot of times you'll have trees down, and we just saw this in Central Florida with some of the storms that came through, and the trees crush, multiple cars. And the people who own those cars all think that you're going to pay for their car to be repaired. That is not how it works. And so most of you should understand that the association has no insurable interest in an owner's car. Okay, so that car is owned and insured by that driver. We are not taking any interest in that. The only way the association would have any interest in that car is if they took control of it and were parking it in like a valet situation or something like that. But outside of that, they park under a tree, they park anywhere in the parking lot. They're taking that inherent risk. That is called a comprehensive claim on the auto policy. So there's comp and collision. Collision's when the car is driving and gets into an accident. Comprehensive is when something just falls on it like that. The car is parked and it gets damaged sitting there. Usually the comprehensive deductibles are lower. And hopefully folks have the coverage on their car, but that's who covers it. So when the tree falls, the tree doesn't matter who owns that tree. It could be the neighborhood next. It could be your neighborhood, whatever. It all depends on whose property the tree falls on. So whatever the tree falls on, a house, a fence, a car, it's the people who own that property that are responsible for that, not the person who owns that tree. So I think that's something that gets misunderstood a lot. So again, if your neighborhood tree falls over and crushes 3 houses in the next neighborhood or condo buildings, you're responsible to your basically, your line, property line to remove your section of the tree. And then after that, it is on the owners of those properties to deal with that. So just keep that in mind. Some tips here. So these are some tips I've come up with over the years, just in the stuff that I've dealt with. So this is firsthand, just had these losses. You guys know both Nagar and I sit on several condo boards and have over the years. I was on 4 at one point, all of which when all the storms came through and dealt with hurricane claims on most of them as a board member, as president of the board. And so I've lived it on the board side. I've lived it obviously as the agent for thousands of communities that have had hurricane claims over the years. So these are kind of some bullets, and Nagar, feel free to add after this. I just threw these on here as my kind of takeaways. So one of the big ones is trees. So we just talked about it. So we know that trees aren't covered, right? And the trees do a lot of damage to things that they hit. It is imperative that every association that has any type of significant trees on their property, have those trees trimmed and thinned prior to storm season. It should happen every year. And so if the wind can go through the trees easier, it's less likely for that tree canopy to basically catch the wind like a sail and put the tree on a car or house or anything like that. We know that the tree damage and the removal of the trees and all that stuff is not covered. So having it handled prior to storm season is good. So I can tell you one of the places I'm on the board for right now, we looked at some of these trees are so close to the buildings. Some are hanging over the buildings. We're just removing the problem trees and we're, taking the canopies back on the ones that are close to the buildings. So, please do that ahead of storm season. It'll make your life a lot easier with the cleanup and the damage that's caused during storm season. Another big one is sewer systems. I can't tell you how many losses we've seen because the sewer system had debris in it and it backed up. So like Ian, I'm telling you, Ian, we had associations completely wiped out with flood losses that had the flood system that was in place worked correctly, had the runoff done what it was supposed to do, it shouldn't have flooded at all. So, I mean, you can overwhelm a sewer system pretty easily if it's clogged with stuff. So, you get those vac trucks out there that'll vacuum out the system, make sure that wherever this water is going, that system's in good working order, that you don't have leaves that are basically just clogging up sewer systems and sewer pipes. So make sure you're paying attention to that prior to storm season. If you're seeing any of these big rainstorms come through prior to storm season and leaving puddling and issues, you have to address that. If you don't, it's only going to be worse when it's an Ian that comes through and drops 20 inches of rain in 24 hours. You're going to get screwed. So just be careful on that. Roof inspections, another big one. So we recommend all our clients do roof inspections annually. I get it. I know a lot of people don't, but if you're going to do it, if you're willing to do it at the beginning or prior to storm season, right? So actually right now be a great time. So May, June, July, have those roofs inspected. Back in the day, it was much tougher to do these roof inspections. It was costly. It was timely. People had to climb up on the roof. They'd cause all kinds of damage while they're walking on there. That's not how these inspections happen anymore. A lot of this stuff is all drone related. Company comes up, runs the drone. It's one guy. They revert, do the video later at the office. You can do this a lot more cost effectively, a lot easier, quicker. And it's important because the biggest issue we see when a claim gets filed for a hurricane is a denial because the damage existed prior to the storm. That's what the carrier will say. The carrier will say, this is old damage. This is not related to the hurricane. The biggest defense against that is being able to show a roof inspection from May 14th that shows that damage not there. And then boom, storm hits on August 14th, which is only a few months later. And here we go, we have the damage. It's going to be very difficult, if not impossible, for the carrier to use that denial language, because you're going to be able to say, hey, listen, 3 months ago, this didn't exist. And oh, by the way, we've been insured with you for those 3 months anyway. So whatever happened, I mean, it's kind of on the insurance carrier at that point, because you could show that damage didn't exist prior to the storm. So getting that in place is great. Also, if your roofs have actual cash value, depreciated value, having an idea of the valuation of that roof, the condition, the useful life and stuff, that's really good, because not all 15-year roofs are created equally. I mean, you have a 15-year-old roof on a building that has been under a lot of pressure, rains, winds, not been inspected, not been properly maintained. It's going to look a lot different. Maybe it was put on badly to begin with, versus a 15-year-old roof that was put on correctly, has been maintained correctly, has been inspected. I mean, you may have plenty of useful life on that 15-year-old roof, whereas the other one may be well beyond its useful life. So not everything's created equally, but the only way we know that, or your carrier knows that, or the adjusters know that, is if you're doing that work, documenting that stuff, and then getting it ready so it's available. So you got to be your own advocate there. Temporary repairs, you have to be ready, like we mentioned earlier. Do you have tarps? Do you have boards for the windows? Do you have a contractor in place to put those tarps and boards up if you need them to? Most people are going to say, I don't know, or I've not looked into that, or I don't have that stuff. Well, that's kind of a problem, because if a storm hits on August 15th, I was like, and you need to get these buildings tarped and boarded up, where's that material going to come from? Who's going to do that work? I mean, it's not going to be the president and secretary of the board up there, nailing stuff into the roof. You want a contractor that you can get with ahead of time, a restoration firm or mediation firm that offers these services. A lot of them will contract with the association prior to storm season, and that will allow you to, one, vet that contractor ahead of time when your buildings don't have no roof. And then make sure that contractor has the right insurance coverages, has the right pricing that you want locked in, can provide the services you need. And a lot of times those contracts will basically obligate them to deal with you and your community first. And that's a huge thing, because when a loss occurs and these people are running in 1,000 different directions, it's great to have the company that already knows and prepared for your building and your issues, that's ready to go and is coming out there to handle it. And you don't even have to make the call, right? They're just there. So just think about that going into storm season, really kind of important there. The last point I was going to bring up was financials. Just being able to look at the financials of the association to know that you've got access to money, whether it's through a loan, line of credit, reserve funds, passing assessments, whatever you need to do to get the money you need in the event of an emergency. That you don't want to go into storm season with no idea how you're going to do it. That's not a good plan. So you keep that in mind. Anything you wanted to add there, Nagar, on those items, or something I might have missed? Nope. Okay. All right. So state of emergency for community associations, this is important. So there is a state of emergency statute that's put out there for the 718 condo statutes. If you're a 718 condo association, 718.1265 is the state of emergency statute. When a storm's about to hit the state, it is very common that the governor is going to declare a state of emergency for any county that storm's projected to hit in. And of course, if they're like Irma and Ian, it's the entire state of Florida is basically under a state of emergency. If that happens and the county your condo is located in is put under a state of emergency, there are emergency powers that are put in place for the board of directors and the management that are very different than what your day-to-day requirements are. So I'm going to read some of these out to you. Happy to send this to whoever needs it. But you can require all unit owners to evacuate the property. So that's something you have the power to do. You could condemn all or part of a building that is damaged. So you can actually do that as a board. You can borrow money without membership approval. So you do not need membership approval to get a loan or a line of credit. That's a huge deal because I was president of a board that needed basically 2/3 of membership to approve any loan we took that was over like 3% of the budget or something stupid. So, being able to borrow that money without membership approval, if that's what the docs require, that's huge. You can contract with the government for debris removal or repair. So anytime like FEMA's coming around with that emergency debris removal piece, you can contract with them without needing, board meeting type stuff. You can enter into contracts on behalf of individual owners to make individual owners and then make individual owners responsible for payment. So this is something where you can see like AC systems that are the association's responsibility to replace, but then there's damage inside the unit due to water loss and stuff, and you can't fix one without the other, or you need dry out, or you need to do interior repairs, and you can't get around the fact that you have to work on unit owner related property. You can do that under this emergency piece as well. You can hold unnoticed meetings. You don't need to notice the meeting and wait 72 hours or 48 hours or whatever the deal is. You can hold unnoticed meetings in the event of state of emergency. You can appoint assistant officers. So let's say some of your boards of directors are out of state and you need people that are local that are there for whatever reason is going to help you. You can appoint them on the spot. So to be officers of the board. You can relocate the principal office of the association. This probably isn't an issue for many of you, but if you do have a community association office, you can move that. The two probably biggest are you can levy special assessments regardless of any provision to the contrary in the documents. So even if the authority does not appear in the declaration of the condo articles or bylaws, you can still levy a special assessment without a vote of owners. So this is a big deal too, because again, one of the boards I was on wouldn't let us levy a special assessment beyond a certain percentage of the budget without a membership vote. And that is not good, and especially when you're in a rush trying to get funds. So if you know that stuff's in your declarations, and you've had that problem before, and you get the state of emergency powers, you may want to take advantage of that while those powers are in place. I mean, obviously, talk to your community association council, work with them on this, but that's some kind of a way around some of those issues. Also implementing a disaster plan before or immediately following the event, which a state of emergency is declared. You can include, shutting down elevators. You can shut electricity, water, sewer, security systems, air conditioners. You can do all kinds of things you've got the power to do as part of a disaster plan after a storm hits without needing, approval to do that. So the state of emergency statute is pretty powerful. So it's important to know what you have in there, what you can use in the event of a loss. And then also the state of emergency, if it's declared and a loss occurs to your property. So let's say state of emergency is declared and your condo is in Orange County and it gets damaged and the state of emergency was in Orange County. There's a 2005 state statute, which is statute 627.4133. It was passed for residential homes, apartments, and condo policies that have damage to property in a storm and in a state of emergency is declared. The insurer that was insuring your building cannot cancel or non-renew your property policy until 90 days after the property's been repaired and after the storm damage has been repaired. So that's not going to happen quickly. So some of you may have a loss in August in a storm and your renewal comes up in December and you can't have that damage fixed in time. Most other insurance carriers out there are not going to want to write a building that's got an open claim with unrepaired damage. You've probably run into this if you've dealt with this in the past. So the statute protects you in the sense that your carrier has to offer you renewal terms. Now, what we've all learned is there's nothing in that statute that prevents them from increasing pricing. So the premiums will likely go up. And sometimes it's just punitive, the stuff that they do. And we know that stinks and we hate that. But that part of the statute has not really been addressed. It's just requiring them to stay on it, which again is important and helpful. And we play that game and use that. I've got plenty of associations right now that are still under their Irma and Ian coverage because the carriers are required legally to offer those renewal quotes, or they would have left the account years back. So that's an important statute to note as well. So that's the disaster prep piece of this. And so I'll go into some other stuff here, just kind of giving you guys some updates on the market and some of the statute changes, just so you guys are aware. But that's the bulk of the disaster prep piece. Anything else you wanted to add, Nagar, before I stop on that side? You're on mute, just so you know.
Just something that we can offer to our clients that can be helpful is for those policies that we write, some of them want to start building a deductible reserve. So if you guys need to know about how much you should start reserving for, we can help you with that. I just shot an email out this morning about that.
Yeah, and so that when we talk about these deductible reserve funds, I always tell my boards it's good to have a little bit of money in the kitty sort of thing. I don't think you need to fund 100% of the deductible or something crazy like that because I think then people
Yeah.
start talking about being crazy amounts of money you're having to add to that
Yeah.
reserve fund. But just be cognizant of it. If you have the financial flexibility to do it, it's good to have, but it's not something you need to fund kind of forever, right? Unless you have a storm, obviously, and it needs
And
to
the
be.
and the other thing, just to kind of write this down, Phil had mentioned it earlier that, if you do have to end up passing an assessment to your owners because there's a shortfall in funds to, let's say, repair a roof or repair all the damaged property, that's something that we can help you with the language because you have to be careful when you send that assessment letter out to your owners. Depending upon how you write it, the individual owner's insurance carriers may pay it or they may not pay it. So you got to be very careful about how you word that letter. And Phil and I have templates. So let's say you guys have to pass an assessment, $2,000 a unit, because there's a shortfall in funds to fix the damage from a hurricane. If it's worded correctly, meaning if it says it's due to hurricane damage and there's a shortfall of funds, those owners can then submit that letter to their individual HO6 carriers to be reimbursed. There's something called loss assessment coverage. However, if the letter's not worded correctly, their carriers may very well deny it. I've seen it happen because they may think it's just a normal assessment for maintenance.
Well, the best example of this is the landscaping. You'll see these reserve letters go out saying there was all this landscaping damage and everything else. That's not covered
Right.
by an insurance policy. And so their homeowner's policy is only going to give you the assessment money for things that their homeowner's policy covers. So you got to remember, if their homeowner's policy doesn't buy wind coverage, then they can't get the assessment coverage. If they
Yeah.
have wind coverage, it needs to be that you're funding the deductible. So we had $1 million worth of building damage from the hurricane. The deductible was 400 grand. We're putting the deductible for 400 grand and we're passing an assessment for that. We're not adding in all the other stuff like the landscaping and the overtime and all these other things. We're just focusing on the piece of the stuff that was covered or by insurance, even though the deductible didn't, cover that piece. That's the easiest way to do it.
And if a hurricane comes out, Phil and I are on top of all this stuff.
Yeah,
So
we
we will
got
be
the
sending
stuff.
correspondence. Yeah. We're just telling you this stuff. So when you see an email from us, it's like, oh, I remember them talking about it.
Yep. And then there was some questions that came in, so I'll just answer these real quick before we get out of it. So, is this retroactive or moving forward at the time of loss changes? That was Michelle, which I don't. I'm not sure what she was mentioning on that. So, I think when you meant like were you talking about the disaster, the emergency statute? I don't know if you want to just add on to that. I just want to make sure I answer that right. And then what the statute number for the provision. I read that out, but I'll say that again for everybody so they have it. So the emergency statute is 718.1265. And the state of emergency and a covered loss statute that they have to, offer coverage is 627.4133. So that's that piece. And so if Michelle wants to add to that what she meant by the retroactive, I just want to make sure I don't answer that one wrong. But I'll keep going. So the only other thing I was going to mention is we just did a budget webinar. We're happy to send you guys that link that goes into a much deeper dive in this stuff. But since we were on this call, we all just want to make sure that you guys know that the budgets that we put out back in August, which was basically looking at a 20 to 50% overall premium increase, is what we were kind of targeting for 2024. Obviously, 2023 was a better storm season than we expected. The market rebounded stronger than expected. So we've not seen those type of larger range increases. Most of the stuff has kind of been in that, I would say, probably 10 to 30% range for the average account, probably even lower than that, maybe on average. We still see some outliers that have pegged higher, but we've actually seen some deals come in under year over year. So decreases we've been able to negotiate, which didn't happen at all in 2023. So is more positive news. We're beating budgets on most deals now. So if you do have a renewal coming up in the next 30, 60, 90 days, we're seeing some boards that are still kind of panicking from the prior year and are worried and think it's going to be catastrophic. And I just want to make sure they know that that's not the case. So we're not expecting it to be another major increase on your 2024 renewal. So in case you haven't got that message, we want to make sure we're putting that out there. Obviously, no idea what's going to happen with storm season. The market's going to continue to change, but right now we're on a positive trajectory. So it's been better than it was before. So just to keep that in mind. There are some pressures on the non-property lines of coverage. So we're seeing it with general liability right now, kind of a glut of lawsuits for trip and falls and things. You've probably seen it in your communities. But several carriers have left the state of Florida. That market's become tougher to place business in. I do think we got positive tort reform legislation passed in March of 23 that's going to help in the long run, just cause some issues here in the short term. So general liability is under pressure. Directors and officers, probably the most pressure we're seeing. It's a small line of coverage, so it's not really that huge of a deal, but there is some significant pressures on the D&O side where the carriers are non-renewing a lot of condos in Florida due to statute changes, or they're increasing deductibles or amending terms. So D&O is something you'll probably see some stress on here over the next year. Appraisal values, we're seeing that change. So, if you had an appraisal prior to 2020 and then you got one in 2021, 22, that probably increased significantly, which obviously drove premiums because you had huge value increase and the same time you had rate increase. We're seeing that start leveling out now. So the amount of year to year appraisal value increase is getting closer to where we historically saw it at 3%, kind of year over year increase with inflation. It's a little higher than that, but it's not as bad as the 15% or so we were seeing just recently. So the hope is any updated appraisals that were done in, let's say, 2022, getting an updated one in 25, it shouldn't be as crazy as it was when you updated from 2018 to 22 or something like that. So just keep that in mind. Now, big notes for everybody, structural inspection. So the phase 1 structural inspection that's required for any 3-story or taller building that's 30 years or older is required to be completed by the end of this year. So 12/31 of 2024. And then anybody that's in a 3-story or taller building, regardless of age, needs a structural integrity reserve study completed by 12/31/2024 as well. So that's the end of this year. So again, that's the 30 years and older buildings need both that are 3 stories or taller. Any building who's 3 stories or taller needs the SIRS, the Structural Integrity Reserve Study, even if you're newer. And so this needs to be done. Now, the SIRS, as far as that report being done by 12/31/24, you don't need to implement it until your fully funded 2026 budget. So the way the law reads is the budget approved after 12/31/24, which for most of you, you'll be approving the next budget you're going to approve is going to be the 2026 budget, which will be done likely in the fall of 2025. So you have some time for the implementation, but they do require that report to be done by the end of this year. We know a lot of our clients have already jumped on this, but for those of you that haven't, you really don't want to wait to the last minute and you'd rather have that stuff getting worked on. Stone Building Solutions is a group that we've provided before to you. You've seen webinars from them with us. Tara Stone, or used to be Tara Munoz. You probably recognize her from her time over the years, but she's great. The group there is great. They're not the only game in town. Obviously, there's other people you could use, but there's someone who's been very useful for us to provide to our clients and has gotten them work done pretty quickly. They can do appraisals for you if you need updated insurable value appraisals, regular reserve studies, structural integrity reserve studies, the phase 1 and phase 2 inspections. And again, you want a company that's going to do it with you in mind as the association, not just kind of covering their ass sort of thing and creating such a crazy amount of reserves that you kind of drown underneath it. So you want to factor in, maintenance you've done and things like that. So just important there. We've got multiple links for webinars that they have done with various members of the Florida House and Senate that are really good. So if you need that, feel free to reach out, email us. We'll get that to you. As far as legislative changes in 2024, the 2 big ones I'll bring up is going to be House Bill 1029, which was the My Safe Florida Home Program. This is just to throw this out there. This has been in existence previously, but they funded it again this year and added condo associations for the first time ever. So a condo association that's within 15 miles of the coast can apply for these grants from the state, where basically the state, every $2 the state pays, the association pays $1. So that's pretty good, right? You're getting 66% of the cost. It has to be involving a wind mitigation issue. So it's going to be roofs and windows. Those are the 2 big things. But if you have an older roof and you're looking to put a new one on, or if you have older windows and you want to replace them, even though that may be a unit owner issue, these are things that the association can apply for grants for. It is not an easy process. You got to go through basically an inspection that comes in first and make sure the community is deserving of it and blah, blah, blah. And you kind of go through it. I don't have the way to walk through this. Nobody does yet. It's just been signed. You're going to want to get with your community association attorney. And we're looking forward to those attorneys to kind of tell us how they're going to navigate this for the clients. There's some stuff in here like that requires a unanimous board vote to get the process started. But then for every building that gets a grant, you need 100% of owners to vote positively for it. So that's a little bit wonky. The roofs at $11 per square foot or $1,000 per unit max. Windows $750 per unit, not to exceed $1,500 per unit. So there's a good amount of money potentially there. A max grant per association is $175,000. But still free money, right? Or sort of free money. So keep that in mind to look at that if you're within 15 miles of the ocean and you've got older roofs and windows. House Bill 1021 is another big deal. We don't really know all the fallout from yet, but this is going to be change the way that homeowners and condo associations, from a management perspective, kind of function. One of the big things in there is to get rid of like interested party contracts and conflicts of interest, which unfortunately we've just seen grow over the years in this world, where board members or managers will have some sort of relationship financially with the vendors that they're using, and so management companies can have this situation, and unfortunately, they're trying to clean this up. So they have new requirements that are going to be in place to disclose conflicts of interest if the management company is receiving funds from a vendor, or a board member is, and it'll go through a whole bunch of stuff you have to do to comply with that. And it actually gives the ownership a potential with 20% of members to overturn any board vote that's done under this as well. So that's going to be very interesting to see how that plays out. We're still waiting for all the ins and outs on that, but House Bill 1021 is interesting there to check. And so be on the lookout. More comprehensive legal updates from the law firms. You know they're going to get those courses out there. We're trying to get one to market right now with some of our lawyer friends so we can kind of go through some of these changes, which are not necessarily insurance related, but are important for our clients to see and get. So that's it. So that's quick. We hit it right about an hour there. So see, I was right on time. And then I don't think we have any other questions that I saw. I saw Michelle mentioned it was no time frame to file a claim. So I was mentioning that. So it's 3 years for a hurricane claim. A few years ago, went down to 2 years. It's now 1 year. So it's 1 year from when the storm hits that you have to file the hurricane claim by. So that's the time frame that's in place now per the most recent statute changes. So just to reiterate, this class is for the credit. So Jess Steele on our team is looking at all that, making sure that we got everybody down that needs that. That'll post in about a week. And then remember, if anybody needs the a webinar link that we just went over here, happy to send that to you. I'm going to go ahead and put my email address in here, and Nagar can do the same for herself. And then that way you have our contact if you need it. And then we can send you the link. We can send you the disaster, anything we just talked about. If you need like the statute numbers or the or stuff for the emergency statute or anything like that, just email us. Or if you didn't want to ask a question on this and want to send it separate, happy to help you with that. So hopefully you guys found this useful. Nagar, anything you want to say besides crossing fingers for no storms?
Yeah.
Can you do a belly dance or whatever?
God help us. Yeah, I don't know if there's a belly dance, rain dance, but I'll try it.
Do whatever you gotta do.
We will also send that link out of me belly dancing.
Yes, we can get that done too. So yeah, anything that you all need basically to help you through the storm, that'll be a good one. So all right, I appreciate you guys. Thank you for everything you do for us. We appreciate our clients and our managers. You guys have a wonderful day, rest of the week, and hopefully no storms. Or if they do hit, not our state.
Not here.
Yeah. Take care.
Bye.